Okay, hi. Good evening, everyone. Rauf Said here from Noble Sky International. How's everyone doing on this fine Friday evening? Let's hope and see. Let's get more of you online. And I'm hoping to just cover a little bit about the part two on profits, on who doesn't love profits on from US properties. Today's part two of what I covered last week. So let's see. Let's get some people online. Just say hello. If you're online, you can just drop me a comment. I would love to discuss with you, talk to you, engage with you, and find out from you your opinions, your what are your action plan, what do you intend to do over the next before when we exit circuit breaker, before we exit circuit breaker. Right, so come, let's see. Let me know where you're from. Okay, and if you are from another country, please just drop a comment. I would love to know where you're from. All right, so okay, so I am looking forward to meeting more of you this evening. Okay, so how's everyone this evening? How are you? It's 9:30 p.m. We try not to drag too long on this particular live video. Hello, Fraser. And we will hope to be able to wrap it up in an hour. Oh, no, probably 45 minutes or less. I might take a little bit of time because I want to go into rental this evening. Last week, I went into flip profits. This week, I will probably touch a bit on, today, I will touch a bit on rental and have a bit of calculations to go through and news to update you. So, all right. So I'm looking forward to meet up and know more from my audience. Okay, so hi. Okay, you need to grant. Okay, if you're commenting on this, you might need to grant StreamYard permission to display your name because I'm not sure who you are. I apologize. Okay, because we're using StreamYard. All right. Okay, so I would be moving on with my content for this evening. And if you can hear me well, give me a thumbs up. Give me a like. Just press the like button. Okay, press the like button. Press the love button, the care button, the set button. Whatever reaction you want to press, go ahead. Okay, whatever you want to feel like pressing, just press. Okay, so I know there's some form of engagement, and I would love to see some of you. Hopefully, I'm trying to figure out a day, an evening whereby I can actually bring you on this particular call. Okay, and we are planning for that in the next few weeks. In fact, okay, you can come online on this call whereby I can answer questions from you, and you have any questions and that you might have, I would like to find out from you. So I probably want to bring you on a call on one of these days. Okay, so we can plan that. All right, and we can discuss things. You might have some questions for me, and if I don't have the answers to that, I'll tell you. I will find out for you as much as I could. Okay, so let's get on with the show. Today, we're going to cover on who doesn't love profits. Everybody loves profits. Everybody want to make some money. All right. So it's either in the world of real estate, there's two methods that you can make money from. One is capital gain, whereby you earn money from the profit of selling the property. Okay. If you did not sell a property, you had capital gain is probably on the equity on paper that you earn the money from. The other way for you to earn money from in real estate is through rental income. And rental income is one of the best, most stable way of producing wealth, of generating a lot of millionaires, especially in the US, in Singapore, everywhere, literally everywhere. Real estate has been one of the highly proven vehicle of wealth creation. Okay, it's real estate. The reason being, hello, I'm not so sure who you are. Good evening, everyone. Okay, when we talk about real estate, most of the time people buy real estate, they don't use their money. Okay, they either leverage with other people or they leverage through a loan through the bank. In American context, and I'm going to talk a bit about American context. When we talk about real estate, when we buy property using a loan, example, if you use a loan to buy the property, the loan, okay, helps you to leverage, so you don't have to fork out all your money to buy the property. Second, the property has depreciation. Okay, finally, when it comes to the tax season, we need to file taxes for your property because you hold it out for the long term. The IRS, the tax department, feel that your property has depreciated in value because for whatever reason it depreciates. Although it might appreciate in real value, okay, but on paper when you report on your tax, it's actually depreciation. So you can divide it by about, I think, 16 years around there. Okay, and that's depreciation. Okay, so that is favorable for you when it comes to writing off your. It's like a paper loss. Okay, so it gives you more profits in your books at the end of the year. So you pay lesser tax on that. And thirdly, you get rental income, and fourth, you can get capital gains. So all these factors contribute to you being able to look at real estate as a very, very solid form of investment. You get capital gains, you appreciate in value every time. You have rental income, that you get rental income every month. You have a mortgage which is paid off by the rental income, and then you have paper loss, which is depreciation. So these are combo factors, right? That's bonus for you, for a real estate investor to take advantage of. You have the ability to take advantage of all these advantages in buying properties just for the purpose of investment. Okay, so I believe different countries they're almost the same, but in America, I'm just saying these four advantages. Right. So let's go on to the next one. Let's talk about what's happening in the news. I'm going to cover a bit about what one of my our friend on the group actually he posted on this particular topic. Okay, bidding wars are back in the US housing market. Okay, if I were to let me see whether I have it better. Yeah, this is no sorry. Okay, there you are. So here, full screen. Okay, it is this article is reported in Singapore Business Times, and it is already reporting what's happening in America here in Singapore. Property prices surprisingly is on the rise, even when the stock market at that point in time took a beating. There's almost 40 million people that's unemployed. How in the world did the property price went up when that happened, right? Okay, so what this took a lot of people by surprise. In fact, this was one of the things that I mentioned earlier on. I wasn't exactly very surprised. I'm not trying to blow my own trumpet, okay, but I wasn't very surprised because when a lot of people pull off their listings from the market, okay, when they pull off their listing from the market, because people are panicking, right? There were a lot of homeowners who wants to sell a property, they decided not to, because they don't want people to come to their house spreading germs whatsoever. So they don't want that. So a lot of listings got pulled off from the market. Okay, and when that happened, the number of inventory shrunk, right? And I've covered this before. Number of inventory shrunk, so the amount of buyers who want to come to the market and buy their property they had to compete with the same number of buyers for a lower inventory of property. So that inadvertently causes the property price to rise. And that was like surprising. Like people were not anticipating that. They thought, hey, coronavirus, economy is taking a better, okay, market is going down. Why we should be able to get bargains? But no, they end up going into bidding wars, which is reported in this particular article. And this is something that a lot of people was surprised. They saw the whole thing. Hey, this is not exactly what's supposed to be naturally happening in a situation whereby the economy is taking a beating. This is not natural. Okay, well, this is the part that I want to cover. Okay, and I've mentioned this before, and I've mentioned several times. All right, when it comes to central banks, when it comes to what all these Federal Reserve central banks they are doing to the market, right? Okay, it is causing a distortion. Okay, COVID-19 has caused a distortion. It has caused a major distortion to the market. People cannot really predict what's going to happen because they never had a point of reference. Okay, their point of reference that they're trying to bring when it comes to COVID-19, right, the pandemic, is either a great recession in 2008, 09, or even worse, they went back, they go back 100 years ago, the Great Depression, okay, in 1920s, the Great Depression, or 10 years ago, the Great Recession. So those two are not exactly economy driven or financially driven because it wasn't a pandemic that caused the economy to take to take a beating. All right, the economy wasn't battered by financial forces or supply and demand. No, this time it is because of COVID-19 that caused the world to shut. Right, when the world shut, that was why I was saying this before in some of my videos that I mentioned before. People want to the banks, the Federal Reserve has pumped money to the banks to be able to allow people to take a loan. But people cannot go out to take a loan because they were forced to go into shelter. Right? Look at the governor, like they're causing a catch-22. Hey, I want to get a loan. Banks say I qualify for the loan, but I want to buy the property. But people are pulling out the property from the market, so I need to clamor for the whatever is remaining. And now, what's happening is that I have to bid with other people for the property and pay more. So property price went up. Well, sometimes recently the bank has tightened their regulation. Okay, that came a bit later on. So when the bank tightened their mortgage requirement, so it costs only they only want to serve the higher end, the one who can qualify more, the one with better credit. But that's just half of the story. If you read further, okay, there are still many banks. Okay, don't look at Chase Bank or the big bank, because usually, from my understanding, when I speak to people on the ground, these big banks are not the friendliest of banks for local working class Americans to take a loan from. Okay, they are not. All right, they usually go to the community, the Union Bank, okay, whereby they take a government-backed loan, VA loan, Veteran Affairs loan, I think they call it Veteran Affairs, FHA, whatever. I lost track with the acronyms that's happening in the US. There's so many different acronyms. They can still qualify for loans through whatever programs that they can qualify from. I'm not so sure. Okay, there's many of that. Okay, but they were not able to buy the property because they were forced in shelter. Okay, and then when they are able to go up, and some governor they allowed and they describe real estate as an essential activity, they were not to buy the property. There were lesser inventory for them to choose from. When there was a lesser inventory for them to choose from, the property price went up. Okay, it caused a bit of an inflation in property price. That was a surprise. People were like, oh, they were totally surprised by this. Okay, and now put that aside. Let's talk about the bigger macroeconomic picture first. Central banks, like in this case, central banks, they are causing a distortion. Okay, and when supply and demand was a factor, right? The economy is if it's less alone to be governed by supply and demand, okay, it wouldn't come to a point whereby what's happening now, whereby politics and Federal Reserve and human intervention is causing the world and people to be unable to predict what's going to happen. Okay, when big companies has been allowed to get away scot-free with mismanagement, okay, huge too big to fail companies, right? Okay, were allowed to go scot-free because Big Brother Federal Reserve and the government comes in to rescue them, to give them a bailout. Okay, they were not allowed to fail. When they were not allowed to fail, this systemic problem in the system, okay, remains. All right, it remains. Whatever that wasn't allowed to fail remains to still be present. They were just kicking the can down the road to just lengthen the problem. And so right now we are at a point whereby the economy is taking a big hit. People lost their jobs. People are not able to pay their rent, their mortgage. But the stock market went up. Why? Because they have been largely fueled. All right, they have totally disconnected from the economy. And some people already say has been totally disconnected, and it has been largely fueled by central banks pumping trillions of dollars into the buying asset purchase in the finance economy, and the equity market is surged by 15 trillion. It's crazy. Okay, yes, this distortion is insane. So it's like becoming a point in time whereby, hey, we cannot rely on the stock market to tell us whether the economy is doing well or not. So it's totally two separate data that we have to rely on. So this has caused a lot of confusion with a lot of people. So if you go online, if you go to YouTube, several popular and very well-renowned economists, they have different opinions of what is happening. They have different opinions. Okay, some economists say buy gold. Some economists say, heck, don't buy gold, buy property. Some economists say, nope, US dollar. Some is going insane. You have different opinions from different people, and they are all of them bringing their data. They're showing you their data that they found. Okay, the same amount, the same data, but they interpret it differently. Well, who's right? Honestly, to this point in time, this is insane. People are getting confused. So sometimes we find and hit the narrative that is more closely abided by what we are looking at. So for me, I want to look at property price. Okay, I want to look at real estate. I want to be able to know that, hey, is real estate a good investment for us to still buy? Okay, all the property price or all the economists that I was hearing from, like George Gammon, from Peter Schiff, from who are so many. There's this guy on Goldberg, Mike Maloney. Harvey Dent, they're giving all kinds of opinion. Jason Hartman, right? So they have a lot of opinions on what we should buy, what you should not buy. At the end of the day, guys, okay, I sift through all this info. I go through all. I find the most the most simplest message brought across, and the simplest message that I discovered. Don't take from me. Do your own research. The simplest message that I hear and understand is always buying. Never ever buying at retail value. Never ever paying market value for the asset. Never. And that's something that I'm going to abide by. All right. So do not look at buying anything at market value. So let the market run its course. Let it happen. Whatever is happening in the US, in the world. Okay. My principle is to always pay lower than market value. So you allow a buffer between your investment and what's happening in the markets to move. Right. If it drops, you are protected. If it surge, you gain more. Okay. So this is how we are always approaching our investment decision. It's always about buying at value. All right, guys, buying at value. So how in the world would an extreme situation, a major black swan event, affect US real estate? I mentioned this before. If it's example, we are invaded by an alien species, right? And that's something that's happening. If that's something that happens, right, then screw finance, screw anything about making money. Is all protection or just survival, right? It's just protect yourself. Nothing else matters. Just protect yourself. Screw money. Probably the dollar or gold is not even worth anything anymore at that point in time. Okay, so we have to realize and sift out what is important. Okay, as of now, I still know people, even especially during a COVID-19 event, people require shelter. And people require shelter to a large degree because they have to go shelter in place somewhere. They need shelter above their head and they have to go back into their house. And because of COVID-19, it has caused a major, in America, especially because they have the luxury of land. They have a lot of land, the suburbs, which Singapore, Malaysia don't have that much, or European countries, we are not as large as the US, right? Okay, so in the US, they have a lot of land. So people who used to live in high density living, like New York, San Francisco, these kind of cities, they're moving away into the suburbs, into single family homes. And that is a trend that is happening, and there's going to aggressively happen even more in the future. Okay, they want a suburb, a house with a yard, all right, with white picket fence, and they want to live there. They want to be able to work there. They don't want to commit too much into the city unnecessarily. And this is something that is a trend that's happening, and I'm seeing that happen to a large degree. Okay, so if you want, go and check out that particular info. Okay, go and read up about all these news if possible. All right, so this is, as I was mentioning, okay, about the central banks. They are distorting how people are able to read the market. Okay, they're distorting what's happening because of money that was just invented out of thin air and just pumped into the engine, into the financial economy. They just pump into the banks, they just pump into the government. Just keep, here you go. All right, it took the entire US about a year to generate, I think, 10 trillion. They did it in a couple of seconds. So it's insane how they handle things. All right, so let's go back to this one. All right, can you see? Let me just increase. Okay. Okay, so now I am going to go through a simple analysis on rental. Okay, last week, if you remember, on last Monday, I've covered about flip on this property in Kingwood in Texas, a very atas and fancy place in the US, in Houston. Okay, it's an A-grade area, valued about $279,000, and it's a single family home, 4-bedroom, 3.5 bath, 3,200 square foot, 8930 lot size. The lot is 8,930 square foot, and built in 1998. Okay, and the school rating is very high, 8 out of 10, and very low crime rate. In fact, the lowest. Okay, they had the lowest band of crime rate. And household income, 87,000. US household income about 50,000. So this is way above median household income. This is median. Okay, so the median in the area is 87,000. Not too bad. 93% owner. So people generally they own property. There are a small bunch of renters. Okay, and white people about 85.7% white people. So don't ask me in this video why I choose this. It's something that I wouldn't share publicly, only in my private class. Okay, so I'm going to go back into to show you the picture of the map or the property. This is the property itself. All right, that's the property we're talking about. Ta-da! So what do you think? 279,000 US, cheaper than a 4-bedroom flat in Tampines. Okay, Tampines 4-bedroom flat doesn't cost cost more than this property. Well, what to do? We are subjected to our own local laws, right? So, all right. So this is the property itself, and I'm going to open Zillow again to show you the property listed on, I mean, the property as mentioned on Zillow. Okay, so Zillow, these are the data that Zillow gives, and the rent estimate is about $2,400. The rent's estimate $2,400. So if you own this property, you rent out, it's about 2.4K. Okay, so now this something for you to take note. If a property is valued usually at 200,000 and above, usually those properties are best used for owning. Okay, not really for flipping. If you want to flip property, single family, if you want to make more bang for your buck, all right, for your investment, you want to have higher returns on your investment. Okay, the downside, the flip side is that you will probably have to do a lot more management because the quality of renters are not exactly that great for a lower price house, okay, a lower value house. A higher value house means usually the renters, the tenants who lives there, they have higher affluent, they are well educated, and they take care of things better in the general sense. Okay, a property price usually for rental they like to look, it depends on area, it depends on area. For rental usually about 150K. That's usually the price, the value of the house, or lower for them to buy a house whereby they're able to earn better returns on their income. But 250,000, 300,000 still okay, but it's a bit expensive. Why I'm using this example for rental, I should use another example in fact, but because I'm just following up from what I did last week on Monday. Okay, when I did the flip, right? Okay, I did the flip analysis. It's right down here. Remember this? I did this flip analysis and came to the point whereby if you want to earn, okay, let me just reduce this. If you want to make 30% on your money, all right, if you want to make 30% on your money, meaning if I want to invest, I make if I invest $1, I make $1.30. If I invest 100,000, I make 130,000 back cash. Okay, if I want to be able to do that, I need to give an offer for this property. What? $185,000, $184,000. That's the offer price that I have to give. Let me just increase the size. Okay, 184,000. Then I do what I need to do. I pay all the expenses I need to pay. Okay, and then whatever miscellaneous cost that might happen. Then all these costs plus the price I pay will come to a total expense of 229,000. From 229,000 to $230,000, I have spent 230K. I sell for 298,000. I make $68,000 in profit. That's 30% on my money. Okay, so this is the flipped analysis that we came up with. Okay, so if you want to make 30% on your money, you need to sell at 298,000. If you check $93 per square foot, however, if the area does not support your data, if everything here, example, here is not 98, it becomes $88. Here is $86, here is $80. And you are trying to sell at 93. Obviously, there's a distortion, there's a discrepancy here. You need to lower down your target sales price to maybe $80. Okay, $80. Now you only need 14% on your money. Okay, so if you want to be 30%, you got to lower down the offer price to even lower to 1%. Okay, 155,000. That's your offer price. But of course, good luck to the seller wanting to sell to you at that low. They won't budge. Not unlikely for them to do so. Okay, so this is a good gauge for you to know how much do I need to make an offer to the seller if I want to make 30% on my money. Okay, that's a good gauge. If you're willing to take not 30% but 20%, then go ahead and raise the offer price. Okay, but importantly, you need your other data already, the research, what's happening in the area, who are your competitors, and then you key in your target sales price at whatever price per square feet and the price that you're selling at. Of course, if on the actual time when it's listed and the agent is able to fetch a much higher price for you, bingo, great job. Okay, so that's another story. Okay, but this is analysis. This is for you to analyze the data from for you to analyze and know how much exactly you need to offer with all the expenses in place. How much will my profit be? Will this make sense? If it doesn't make sense, scrap. Find the next property. All right. Questions? Any questions from anyone? If you have questions, just drop me a text here. I don't mind answering any question that you might have. No questions? Okay. The last week I did flip analysis. Now I'm going to do rent. Okay. So rent is a little different. All right. Okay. So what will happen in rent? Okay. So let me just remove all this. Pros and cons. Okay, this is just to know the pros and cons of the property. Okay, which I won't key in now. Okay, this is to when we have a scout, they go down to the property, they come back and then tell us exactly what's in the area, what are the pros and cons for each property. We have a scout that goes down to the area, but I'm going to skip that for now because we don't have a scout for this property yet. Okay, let's look at what is happening on Rentometer. Okay, for properties around the area. Okay, Rentometer is the service that I use that we pay for on this site, rentometer.com. They are one of the best rental analysis website in the US. Okay, so I'm gonna take the address, copy this address, and paste it. And then they will ask me what is the current rental in the area that we can likely fetch. So the estimated rental is about $2,400. So I key in 2.4K here. And then how many bedroom, bathroom? 4 bedroom, 3.5 bath. So let's choose 4 bedroom. Okay, it's about, okay, you can leave it as that. And then analyze address. So now it will analyze your address to see the area. What is the rental that we can fetch and command? Wow. Okay, look at that. Okay, this website and Zillow is different. Okay, who do you want to believe, Zillow or Rentometer? For me, I'll take Rentometer because Rentometer main purpose is just to analyze rentals. They only analyze rental as much as possible. There are a lot of other sites that you can use, but in this case, this particular property, is telling me the average rent there is 1,395, the median. Our rent, we're trying to rent is 2004. That's crazy. So obviously this property you cannot buy for rental. It's not going to make you money, guys. Okay, this property is meant for you to buy, fix it, sell off to an owner who wants to live there. Okay, that's where you make the money in for this property. In this property, the amount is not, this particular case, the amount is not suitable for you to buy the property, to hold it for rental. The problem, if you still want to do that, by all means, go ahead. If you still intend to just buy this property and rent out, the problem would be if you have a loan, the amount of loan you want to pay every month for the monthly loan is going to be more than the amount of rental you can get. Okay, so you don't want that to happen. All right, so you want to be able to have the rental being covering the monthly loan. So in this case, this property is about 1,395. All right, so I just key that in, and I'm going to now key in the data here. Am I logged in? Yes, I am. View Pro report. There you go. Okay. Lower rent, moderate rent, higher rent. Okay. So these are the properties that is happening around the area. And I'm going to look around Kingwood, not too far down, around Kingwood. Okay. Now, take a look at this, guys. Okay. Why are there so few rentals in the area? Remember, I gave you the data whereby it was saying number of owner there in the area is 93.7%. So there's too little info, okay, or data for the system to pull out whereby they're able to give a good gauge of what is the rental amount around the Kingwood area, okay, which is a very fancy place. Okay, now they have A, B, and this. Okay, so these are the data. This is too far. I won't take those. So there's B. This one, the rent 2002. Maybe this is the closest you can get. 2002 and A, 800. So this is likely a 4-bed, 2-bath, $800, impossible. All right, this is likely a room. okay, a room rental that he's referring to. So the only one you can probably base on is this B. Okay, C, where is C? C is too far off, probably somewhere below. Oh, C is all the way there. C is all the way there. We don't want C. D is on to the left. It's about probably half an hour drive or something, because US is big, right? So the only reliable data you can get is B. 5106 Sandy Grove, Kingwood. Let's see how it looks like on the map. Okay. Now, if you see this property on the map, it can look somewhat similar to, oh, this is 517, sorry, the other side. Tada, this one. Okay. It is around the same category as our property. Around the same, but this looks fancier a bit. Okay. So what I can see now, okay, there's only one sample property. So this house is now being rented for $2,200. Okay. So I only have one info, one data here, $2,200. So this property, let me just key that in. 5106 Sandy Grove Drive. You can key that in here. Okay, bed bath. How many bedroom bathroom is this? This is about 4 bedroom, 3.5 house, same as yours. Okay, 4 bedroom, 3.5 bath, 4/3.5. Sorry, 4/3.5, 5.3. House square feet, it is about 3175 square feet. House value, this is about, what's this estimate for this property? Okay, the estimate is about 261,000. I'll key as that, okay? 261,000, the assessment value. All right, 261,000. Rental $2,200. Okay, and as you can see, there's not much data. There's not much rental activity around the area. Our property is right down there. There's only one. Okay, it's only one rental property there that we can use the data on, and it's very, very, very little. So you don't have much data for you to use to be able to make a good decision. Now, in the first place, I've already said this property is not a good place for rental. It's not a good rental area. This is a place for you to buy and sell to an owner. All right. Or if you want to build your wealth a lot faster, if you can have the holding power, buy a lot of properties there and pay off whatever loan you need to pay off, and then hope the property price raise in value, appreciates in value more than inflation, more than what your loan can cover. Okay, so this is another strategy, but I don't like to do that because that's speculating. Okay, we don't usually want to do that. So now what I see, let's just base it on 2002. Okay, $2,200, and let's say you're stubborn, you still want to buy this house, all right, at $2,200. And now let's look on the right side. Okay, on the right side here, maximum offer price. How much are they asking for? They are asking for how much? They're asking for 225,000. All right. Now they're asking for 225,000. What would be a good figure? 225,000, 100%. Yeah. Okay. So now you are renting it out for $2,200 and you pay $225,000 for the property. Let's discuss now how much would be your cash on cash return or your cap rate first. Cash on cash, I come to it later. Okay. Look at the bottom part. All right. Here, I put my operating costs, which is something that you need to pay off, things like taxes, things like insurance. If you're the owner, you have to pay for this. Not the tenant. You have to pay for that. So I'm putting about 30%. You can lower it down. This property is likely a higher end property. So you will not be dealing with troublesome tenants. So your tenant profile is probably of a higher end. So you can probably lower this down to 20. Okay, 20%. You don't have to pay too much, except for the only thing you need to factor in is insurance and tax. This is operating costs. Okay. Next one, credit losses will be things like you didn't see. It's not through vacancy, but it's because you're in transition. Okay, so I put credit loss about 2%, and vacancy loss. Every landlord, every property investor who wants to buy property for rental, they will always factor in 8% of rental loss, which is about a month. 1 month of rental loss is 8%. So you factor that in, and then your estimated annual expense is about 33%. Okay, And then from here, you take a look. If I were to buy this property at $225,000, you can see, right? Let me just zoom in some more. Okay, if I were to buy this property at $225,000, I rent it over $2,200. Okay, I would be able to get a gross potential income, which is taking 2,200 multiplied by 12, you get $26,400. Okay, but the gross operating income of $23,760. Okay, this is factoring in the vacancy loss. Now, okay, when looking at the gross rental yield, which is a gross rent, when it is 11.73%. This is what we factor in by taking, okay, whatever gross income you can get divided by the amount you pay, 225,000, you get 11.73%. Okay, all right, 11.73%. 8%, if you factor in only the cap rate, is what you get when you factor in the net income you get, which is 23,760 divided by the amount you pay for, 225,000. You get 8%. Okay, so your property is performing an 8% cap rate or yield. Okay, locally in Singapore we call it yield. 8%. For this property, I get 8% on my money. Okay, and which is equivalent to the cash on cash return. Okay, cash on cash and cap rate here is the same. It will differ only if there's a loan involved. If there's a loan involved, your cash on cash will be more because your cash outlay for your personal cash is lower. Okay, but because there's no loan involved here, so that's why the cap rate and the cash on cash is the same. Okay, now if you were to let's just base on cash, don't base on loan for the time being. If I were to pay for this property, I get 8%. If I am investing in something else, it's earning me 15%. This property will not be the best performing investment vehicle for me because I have another asset earning me more. But at the same time, you need to factor in other factors such as risk. Is that asset that earning you 15%, is that a much safer asset for you, or is that keeping you awake at night? Secondly, is it a paper asset or is it a hard asset? In this case, this property is a hard asset, so there's a plus point here. So 8%, maybe not too bad, but maybe I'll still buy it because I earn lesser, but it's a much stable property. Then the third thing you have to factor in is appreciation. Okay, this property will appreciate in value over the next few years. That asset, does it appreciate? Maybe it doesn't. If it's stock, maybe it might appreciate, but it can also depreciate. Right? Okay, this property, it mostly will appreciate in value. Okay, now I am basing on a not a typical property that we buy for rental. Usually what we base our property, the gross rental yield that we base on is about 15 to 18%. That's usually the property that we buy. Okay, but because I'm just using the same property that we use on Monday for flipping analysis, I'm using the same one to be used for rental because we've already gone through the data before. So this is not exactly a property I would recommend for rental. If you want to, by all means. How do we increase the rental yield for this property? It is through vacation rental, putting the property out and subletting the property on Airbnb or other vacation sites. Then you will help to increase your total rental yield, but you have to factor in all the management costs, furniture, furnishings, and everything, and so on and so forth. So sometimes that can pay off. Sometimes it's still not too bad. So Kingwood, I'm not very sure it is a good place for you to do vacation rentals because it's a bit up north of Houston and not exactly near to Houston. Okay, so I wouldn't buy this property for vacation rental. I will buy this property for myself to keep, for myself maybe to live there if I want to go to live in Kingwood. It's a very nice place. Okay, it's very fancy. The area is very fancy. Okay, now back to the rental yield and the cap rate. In this case, the gross is 11.73%. The net or the cap rate is 8%. So 8%, is it good enough for you? If it's not good enough for you, then search for another property. There's hundreds of properties available. I'm going to show you a couple more in a short while. Okay, so gross rent multiplier, it means for the gross rent here, the lower the number, the better. So 8.52 is quite high. Usually the number that we seek is about 5.5 and below. Okay, break-even duration, 146 months. Meaning if I buy this property and I base my income at $2,200 a month, and it doesn't increase, my rental doesn't increase at all for the next few years, I'm going to break even in 146 months. That is about, how long is that? Divided by 12. 12 years. I will break even in 12 years. Well, If I were to compare this property to break even in 12 years compared to my Singapore property where I break even in 30 years, I think this is a good deal. Okay, but if I were to compare it with other US properties, some people broke even in less than 2 years. Some people broke even in 5 years. I like to break even between 5 to 6 years on my property. This will take me double to break even. So I won't buy this property for rental. No, this is not a property that I want to buy for rental. Okay. All right. So in case any of my potential investors want to invest in rental, think I'm going to buy this kind of property for you. The rental income is not exactly that great. No, this will not be a property to buy for rental. This will be a property to buy to hold, maybe use on vacation rental or Airbnb or to flip. All right. This will be that property. Okay. So this is generally the info that we have, and you have to compare this in a rental yield that you get 11.73% with other investment that you currently have. If your current investment that you have is earning you 2% because you have not invested in anything before, or maybe the best 4%, your retirement account, okay, or your CPF special account, whatever you call it, which you will never get to touch at all. If your best performance is 4% and this is giving you 12%, you have effectively 3x your current money return. Okay, the cost and the return yield that you get from this property is 300% more than what your current investment is performing at. So if that is what you are basing on, then yes, this is a good investment. But don't just base on that, because I'll be very frank, there are plenty of other investments out there that you can choose from that gives you a lot better returns than this property. Okay, this is a good property in a good area, good neighborhood, good property, good quality. Okay, but rental income is a bit weak. All right, so that's a trade-off. Okay, so if you want a better property, you got to look at other areas. And one of the markets that I will recommend to look at will be Atlanta, Georgia, Jacksonville, Florida. These are the two markets that we are looking at very, very closely. Okay, Atlanta, Georgia, and Jacksonville, Florida. These are very strong working class neighborhoods, and property price 100,000, 150,000 is plenty to buy. You can buy this property and you can rent out, and you can get about 15% rental yield on this property. Right? So those are the one that we want to search for. Okay, so that's any question from anybody? No question from anyone so far? All right. So this is essentially the this is the flip and rental analysis file that we have, that I have, that my head of research and operations has generated and created for our investors. And we have used this to good effect for a lot of our property analysis. And we use this property for analyzing a lot of properties that some of my investors send to us. So some of you been sending me some properties for me to analyze from, and sometimes I give you immediately what I feel about the area. One of that is Edward. If you're online looking at this video, I remember you send me a property, a fourplex in New Jersey. Now, New Jersey is not an area that I'm considering to buy. One, because it's very regressive, not progressive, regressive state. They punish a lot in taxes. There's property tax, one of the highest in the country, and the income tax, get double whammy. So there's a net outflow of population from New Jersey to the southern states like Florida and Texas. They want to move away from New Jersey. It's too expensive to live there. Okay, they're taxed left, right, center. And you as a landlord also, you'll be taxed left, right, center. You don't want to be there. Okay, so we want to find a much better landlord friendly state. Okay, so those states that I'm talking about, we think that Florida and Atlanta. Okay, all right. So this is the end of what I have for this evening. I took about 45 minutes. I thank you for staying throughout with me for the last 45 minutes, and I will be covering more content, but I'm taking a short break. The next time I'll come online will probably be in 2 weeks, I think, if I'm not mistaken. We're taking a short break for Hari Raya, to celebrate Hari Raya with my family. And those of you who are Muslims and celebrating Hari Raya, Selamat Hari Raya to you, maaf zahir batin, if you're watching. And if you're fasting, enjoy the last day of fasting tomorrow. And I believe you will find yourself better spiritually. I hope that you find yourself better spiritually over the last 1 month, and you managed to lose weight. I lost weight about 8 kilograms. Lost about 8 kilograms of weight. I think some of you think I'm getting thinner, right? Correct? Okay. So other than that, I have nothing else. Thank you so much for coming online, and I hope to reach out to you in the next 2 weeks. And I'm running a webinar next Sunday, and I'm also running on Tuesday a Q&A, a private Q&A for any of you who's considering to take on real estate investing for yourself, I'm doing a private Q&A in a private Zoom call with those of you who's considering the US real estate investment market, okay, with Noble Sky. So if you are keen on joining us during the Q&A, please just reach out to any of my team member, Fraser or Daisy. They'll take down your details and they will invite you to a Q&A, a private Q&A. We are not broadcasting this to the public. That is private. So you can send me your questions, send out your questions, and I will answer them privately to you or maybe to a group setting. Okay, so this is something that we'll do on Tuesday. Next Tuesday, there will be a private Q&A. So if you want to join the private Q&A, please reach out to my team member, Fraser or Daisy. Okay, or you can drop message here and we will invite you into the private Q&A. All right. Okay, so thank you so much, and I hope to see more of you in the next few weeks. And other than that, Selamat Hari Raya and have a good night. Thank you, everyone. Bye bye.